Hi, I'm Scot Mentzer with Orchard Home Mortgage, and this is your weekly mortgage update. Let's take a look at last week's mortgage rates. So rates were unchanged last week. There was basically not much in the way of economic data or other events to really move rates. So rates have been holding for the last few weeks right around the same mark. So what's the forecast for this week for mortgage rates? Pretty much they should be unchanged. There might be day-to-day movements, but not any significant decrease or increase. And by significant, I mean a rate change of 0.25%. Right now, markets are expecting a Fed rate increase in July. So that's already been priced in. However, if the markets start to believe that the Fed will continue to raise rates in September, then we could see rates get worse or increase more. So we'll just have to keep watching the markets and see what happens. So what is affecting rates this week? We have economic data and Fed rate hikes. So economic data on Tuesday. Today we are expecting the consumer confidence report. If that report is strong, showing that consumers are out there spending, then that will not be good for rates because it means that the Fed will need to continue their rate hike increases. If we tend to have a softer report, meaning that consumer confidence is not that strong and they're concerned about the economy, then that could be good for rates in the long run. The Fed, right now markets, as I've said previously here, that we are expecting a rate hike in July. The Fed has projected they will have 2 additional hikes the end of this year, but markets don't think the economy is going to allow that. If the markets change what they expect to happen about a second hike, then rates could creep higher. But right now, markets are really predicting a July increase with most likely a hold. We will have to see, especially today. The consumer confidence report was strong. Consumers are still out there spending. The economy seems to be doing really well. Inflation, yes, is cooling a little bit, as we can see from reports last week, but it's not at that 2% mark. And remember, the Fed all along has been saying that they want to bring the inflation rate down to 2%. And I believe they're going to continue their rate increases until we reach that 2% mark. So far, a while back when they started this process, they were saying they were hoping for a soft landing, meaning that we were not going to go into a full-blown recession. And so far, it looks like they're doing a good job. But again, we will just have to see how this continues and what happens to rates. If you look at where they've been for the last 3 weeks, rates have been hovering around 7.18%. Every Friday I do a rate alert for some of my agents, and so for the last 3 weeks it's been around 7.18%, or 7 1/8, I'm sorry, or 7.125. So that's where we're at right now. I think we're probably going to hold there. That's probably the new future. So, all right, thanks. That's all I have for this week for another episode of the Weekly Mortgage Update. Thanks for tuning in. Hopefully I'll see you next week. Have a great week. Thanks. Scot Mentzer, Orchard Home Mortgage.